Hey everyone, this is Dan with Theta Trend. Today is Wednesday, February 24th, 2016. It's about 2:20 p.m. again, Mountain Time. The market's closed 20 minutes ago. Well, we had another big up day in there today. The Russell ended the day up here at 1022, up about 1% or so. And this was sort of the scenario that we talked about last night. I was just saying here on the shorter term time frames, which we'll look at in just a minute, the market really hadn't violated any key levels. And even though it seemed weak, it still hadn't broken down. And certainly when we're in environments like this, it's much easier for the shorts to get caught off guard and the people who want to short sell the market. And the market can really turn quickly and surprise all of us. And that's essentially what it's done today. It undercut this low back from February 19th just very, very slightly, right underneath the 1,000 level that we are watching. And from there, it essentially turned higher and came right up to end the day just slightly below those previous lows from the 22nd. So anything can happen here, and certainly the market is moving fast. What it kind of seems like to me really is that things are flailing around a bit, and there's just this wide back and forth range, and it's sort of similar to what we were seeing back here, or it seems like that type of price action might be developing. The blue lines that we see on the chart here are the expiration break-evens for the April RUT CIB. So we had the upper break evens up around 1040 and the lower is down in the low 960s, down around 962, I think. And I did close out the March trade today. I closed it out this morning when we had that pullback, and it was sitting there sort of right on the sweet spot of the position at the time. And to me, it didn't seem like it made a lot of sense to continue on in the trade just because there's enough price risk right now that I felt uncomfortable continuing it. The spreadsheet has been updated. The trade grossed about 407. The net after commissions was only 248, and this was a very active month. So I'd say that's not very typical. Normally the net would be much closer to the gross, but with all the adjustments higher and lower, well, I guess we went lower, then we went higher, then we went lower, and then we went higher. So with all of those adjustments, it really added up, and we ended up paying a good chunk of the profit to Thinkorswim this month, but normally it's not quite that bad. So these are the daily Greeks for the position, and one of the things that's kind of interesting to point out is that we were really sitting in the trade. Initially we didn't have much happening. We were, had a small open loss, nothing really that seemed unusual or anything like that. All of a sudden we got up money here back on February 5th, and that was with Russell at 985. And from there, we went down to test that 940 level, and that was when we hit that 942. And from there, the market just rocketed higher. And once it started rocketing higher is really when we incurred our maximum pain, sort of up in that, on this day, I guess, here, February 17th, which was really just, I guess, what is that, about 2 weeks ago, something like that, not very long ago. And from there, the money came back into the trade pretty quickly with a slight pullback and things stabilizing. But I mean, we're so close to expiration here that it made sense to take the money, hit the target, and get out of the position. This was not an easy cycle, and it was pretty challenging. I certainly learned a lot, and I will be doing a recap of the position at some point just to kind of walk through some of the thinking behind all of these adjustments and what happened. But the other spreadsheet, the main results spreadsheet, is also open, and that's linked out here on the position page. And right now we're running forward with this April trade, and I still need to update the position sheet today, but we will be doing that. So let's go ahead and drop down to the 65-minute time frame. And these are some of the levels that we were talking about last night. We said if the market breaks through this 1,007, we're going to want to see this 1,000 hold if it has any chance of moving back higher. Well, the market came down to the 1,000. It kind of broke through, and it just undercut this low from February 19th, very, very slightly. And after undercutting that low, found buyers, and from there just charged higher. And I think when there's so much negative sentiment out there, it's very easy for the market to flip and scare everybody out of it and end up with a whole bunch of short covering that pushes prices significantly higher in a really big hurry. And that seems kind of like what happened in there today. I mean, we just had a steady buying day in there. The market did close up and above that 1020 level that we've been watching, but it closed just inside of this 1025. So, I mean, really on the intraday time frame, we still don't have any resolution. We're essentially just chopping around kind of in this range from about 995 to 1025, which is a smaller area of balance here within the context of this bigger box, which is 985 to 1035. If the market is able to get up and above this 1025 level tomorrow, it does seem likely that it's going to want to come up here and test the upper bound of this box, and then getting up above that, certainly we'll have to reevaluate it. I'm not sure at this point where it can go, but it really can go wherever it wants to. But this is just one of those things it's good to put out. When the market is above the rising 5-day simple moving average, it does tend to resolve itself higher, at least on the shorter term time frames. It doesn't mean that the market can't break down and head lower, but if the market had broken down here to the 10-day, come up, found resistance at the 5-day, and then tried to head lower or something like that, or even if it had broken even further down below the 10-day and found resistance, then we might have been able to see a little bit of a deeper pullback, but we just didn't see that. And the way that the market sits right now, it is moving fast sort of in both directions without a lot of follow through. This position, the April trade, is really pretty safe right now. The upper expiration break even up around 1040 is in a pretty nice location given the state of where the market has potential to go. If the market was to push up to around 1050 or beyond the 1040, into the 1050-ish area, we'd be adjusting on the upside, and if it made it to 1060, we'd be adjusting on the upside again. So we'd end up in a full-size position at that point with a pretty nice location, it seems like, given where the market is at the moment. So this is the trade as of the close today. We have the market closed here at 1022. The delta is negative 1.94, gamma is negative 0.03, theta is about $6. Vega is negative 19, and the open loss now is about negative $4. So we had a little bit of money come out of the position today, and we frequently see that when price moves back higher. Yesterday, part of the reason that the trade was pumped up is that this upper long put tends to get pumped up when the market sells off shortly after you place the trade. Essentially the money skew flattens out, and the implied volatility of this upper put makes the position increase in value. So at any rate, that is everything I have for today. We'll see how this plays out. I will be putting together a recap for the March trade because there was quite a bit there. It was a good learning experience, pretty challenging. If you have any questions about that or anything else, as always, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.